Hello and welcome to TradingFloor.com's weekly Asia Focus. Making the news this week, plans were revealed for a merger between the Singapore and Australian stock exchanges, and that will take a while to pass through. Many are already scrutinising the deal. The Reserve Bank of Australia is meeting this week, and many eyes are on an expected rate hike, and we'll also get a feel for the Asian sentiment as next week FOMC meeting and tomorrow's GDP data comes out of the US. And with us we have from Singapore Andrew Robinson of Saxo Capital Markets. Hello Andrew.
Hello again.
So if we kick it off with this week, news was announced of Singapore and Australian stock exchanges merging. How has the markets taken that, and what's been happening throughout the week in Asia?
I think generally there was maybe some musings about this potential deal going through towards the back end of last week. But the reaction on Monday morning, I would say not particularly favourable. Singapore has pushed it very much as a commercial deal in that the two entities, I think, will be kept completely separate. It doesn't help maybe that 25% of SGX is owned by the Singapore government. So certainly within the Australian context, there may be a bit of a concern about national issues, shall we say. And I think that is going to be one of the major hurdles to actually get this deal through legislature, through the various processes to actually get it on board. Quite a large deal, 8.2 billion Singapore dollars, or sorry, US dollars. And I think, as I said, Singapore views it as purely as a commercial deal. They're not interested in any strategic investments from a government perspective. It's purely a corporate focus, shall we say. Market's not taken it particularly well since the deal was announced. The stock prices for SGX has been down as much as 9% in the first couple of days. We've had a little bit of a rebound since because it's certainly looking as if it's going to be a long drawn out process. But generally, I think the mood in Singapore is that maybe they priced it a little bit too high, maybe paying over the odds. But generally, it's interesting reflection maybe of how Asia is reacting within itself. We've already seen quite a lot of negative comments out of Australia about the as I said, nationalistic implications. So I think it's maybe a good test of as to how cohesive Asia really is on the whole thing.
And over to Australia, the RBA is meeting next week, and the expectations are for a rate hike, as it seems that the rate hike was seemingly deferred from their last meeting. What's the current feel coming up to this meeting with the RBA?
I think, yes, we've had quite a volatile week on the Aussie so far. The PPI data early in the week was slightly above forecast, and markets took that to infer that the CPI data, which came out yesterday on Wednesday, would also be quite high. Under those circumstances, the RBA was expected to implement the rate hike that they deferred from the last meeting last month. However, it didn't quite meet expectations. It was only 0.1%. Below at forecast, but I think the market was ahead of itself, predominantly long of Aussie dollars and also short of the interest rate futures, and so I think we had quite a deep correction, as much as 2% on the Aussie, and I think that's purely a reflection on positioning rather than the actual outlook for the Aussie. Certainly the RBA meets next week, and now I think markets are basically not looking for any rate hikes at all, whereas before the CPI data they were looking for maybe a 25 basis point rate hike. I think that will be deferred. We've already seen that the Norwegian Central Bank, the Reserve Bank of New Zealand, and even today the Bank of Japan have just left everything on hold. I think it's all a wait and see mode until the FOMC meets next week on November the 3rd.
And over to the FOMC, we've got GDP data coming out. How's the sentiment in Asia at the moment with all this data waiting to come out?
I think it's all about quantitative easing. We've had various media reports as to how much and to what extent they're going to introduce quantitative easing. In the run-up to the November the 3rd meeting, I think we will see some volatility as the excessive amounts of quantitative easing are mentioned, or even a reduced amount of quantitative easing. I think it's an interesting fact that after today's Bank of Japan meeting, that they brought forward their next meeting from November 14th, 15th to November the 4th and 5th, which is the day after the FOMC. I'm just wondering whether there might be some concerted global effort to introduce quantitative easing across the globe, whether it be the FOMC, the US or Japan, or even the UK as well. So I think next week, interesting times, and we'll just have to wait and see how it pans out.
Okay, Andrew, look, thanks for your time with this week's update. And don't forget, you can visit tradingfloor.com for by-the-minute articles and insights on global markets and currencies. And you can also follow us on Twitter at tradingfloor.com. Thank you, and we'll see you next time.